Hey YouTube squad, welcome to another YouTube video. Now, this one has been highly anticipated and requested. This is the risk to reward trade on Euro USD short that achieved 1 to 136, well basically 100, over 100 plus. And again, screenshots to show that entry was made. And yeah, well, let's just crack on with it, shall we? So as always, starting higher time frames, we can see that, which you would have seen from previous videos or maybe future videos if I get this one out a bit earlier, that we were tracking price. We were already tracking price. We're in sync with the market because we've been monitoring the price ever since the highs and even before that as well. And then by doing so, we're not surprised by price movements. We know the key areas to look for potential reversals, potential slowdowns, and even because the majority of the time we're scalping, right? And we're able to just scalp in between moves. But as mentioned, higher time frame wise, we can see that we've had an impulse down. Now we have reacted to the bullish order block down here, which we have done a case study on a long trade taken from there, presenting a really good risk to reward of 1 to 25 plus. Now, as I mentioned in that video, we actually then had potential reasoning for price to slow down at this 4-hour POI. As you can see, price did begin to slow down at that 4-hour POI. Why is that a good POI to keep in mind? Because as you can see here, one, obviously this was a key level. You can see that price was trying to slow down here and potentially create a support level. Price then broke through very impulsively and aggressively. That's what creates the POI sort of nature. And then also then being used as potential resistance around this sort of key level. As you notice from the number there, 1.13800 being that key level area. Now, we have the 4-hour POI. We can see that already from this time frame, prices began to slow down and reject, if you will, from this area. As we go down to the 1 hour, we could then refine that POI. We just refine it to the 1 hour here, as we can see. Yeah. So refine that down to the 1 hour, and we can see that price again has slowed down and begun to create structure, right? So 1 hour is still bullish, as we can see. As we drop down to the 15-minute, we can see that slowdown is here, right? We can see that liquidity has been taken to the upside, right? We've taken these session highs, previous daily highs as well. Not daily highs, sorry, but taken this daily high here, to be fair. So we've taken this previous daily high. We've had this rally to the upside. We have left a clear area, right? Of equals there. We've left as well, or created, should I say. Nice build-up of trendline liquidity as well. Session lows. We haven't had a deeper retracement for this particular break of structure as well. So good reasoning as to why price should at least get to this area. If not, obviously, taking the idea, if we just jump back for a moment, of the reason why we would look to hold this trade is, as I mentioned on a previous video, is that price did wick above, right, the previous high. Now, a lot of people I would imagine would class that as a breaker structure, but for us, we want a strong closure. Even on the 4-hour, we didn't actually close above. Again, it was just a wick above. So, enticing those buyers, and that's why we got a buy move from this order block, because again, that's going to further confirm for those buyers that price is going to look to shoot to the upside. However, we had this clear area that price would need to break above first before we could even consider that fact. And as you can see, we've got that buildup of liquidity. We've got that reasoning as to why we would look for further shorts down to at least the daily low, the discounted price for this price range. And obviously this being the weekly low and monthly low as well. We would expect price to potentially get there, but first we need to get an entry drill first. We need to see confirmation of that. And that's why obviously realistic areas and reasoning for downside moves would be the ones we've highlighted, being obviously taking this liquidity, and even just to the structure alone is a good trade. However, let's see what we get. So as we go down to the 5-minute, we can see it very clearly here, price taking the previous high, literally by a decimal point. Funnily enough, actually, that actually comes into and just about taps into this 5-minute order block here, which we'll mark out. We'll just get rid of this one here. We'll mark out the 5-minute just to keep it nice and clean. You'll see this is where price ends up reacting from. So we're going to use the magnet tool here just to make sure we're accurate in our placement. and we'll drag that across. Ooh. We'll just make it a little bit easier on ourselves. I'll just put the coordinates, and therefore you'll see it across here. Price just missing previously, leaving a session high in London. Price comes back down, probably enticing early sellers to sell from this region. However, price is not done yet. Price goes for that liquidity to actually mitigate the 5-minute block, which is just deeper in the 4-hour block and the 1-hour block, and then price has an impulse. All right. Now at this point we've taken liquidity. So a large reason, not only structurally and not only for the general higher time frame idea that we've gone over, but at this point we've taken liquidity, which again, as we've mentioned before, is the fuel for the market. Now what would make sense managing trade wise? Obviously we have this area to look out for. Okay, we have this area to look out for. Obviously we have these equal lows down here as well to target, and again a POI that sits just below that, just here. So these are areas that we would look to manage our trade should we get any form of rejection or reason to look to take a partial or get out of our trade, for example. So we've already highlighted those, right? You can always you already would have had these highlighted before prices even gotten to our POI or gotten any form of reaction. So you're already anticipating where price can look to move, and anticipating what barriers are in the way of us getting further in towards our target and our trade idea. Now, as we can see here very clearly from the 1-minute time frame, we've slowed down building liquidity, right? You can see here a nice clear buildup of liquidity. You can see price impulsively moved into our POI, rejected, came up, and then we had our break of structure from this area. Now this is a 1-minute order block, as you can see. However, I did refine this down from the 30 seconds to a very clean order block. Very, very clean order block placement. This is where price impulse from taking liquidity and broke structure to the downside. We then correctively, so meaning slowly, returned to our order block. And in doing so, created liquidity as well. So as we can see here, build up of liquidity. And we came to our order block. Now, as you can see already, the order was set at this level, 920. Stop loss just above, 2 pips above. So giving that breathing room as well below the order block, breathing room above the order block as well. So again, being realistic, right? Now, I held this trade much longer, and I took majority of the partials at 1 to 5, as I said. And I will always say, I did not hold this 1 to 130 with full volume or even high volume. I took partials 80% at 1 to 5, meaning I banked 4%, and I banked it relatively quickly. As you can see here, relatively quickly, without even breaking any structures. Took about 18 minutes, let's say 20 minutes to be safe. So it took about 20 minutes to hit 4%. Fantastic, right? Absolutely fantastic. Without even breaking structure, without even reaching any of the areas that are potential barriers for our trade, right? As we can see, price continues. Okay, breaking our first break, taking our first structural point, right? High, a bit slightly higher time frame, so being our 5-minute, for example. Taking our first 5-minute, we come back, we make a lower high. Could even be a trade re-entry opportunity there, but I didn't take that. I was already just focused on the one trade. I've already banked the profits now as well. I've gone break even at this point as well, so therefore the trade can do anything. I know it has high potential to move down based on my trade idea and liquidity. However, I'm being realistic. I'm taking my partials. I'm paying myself as a trader. And again, that 4% on a 100k account, funded or even personal, it's £4,000 or dollars. You know, that's again more than the average person's salary, and we did that in 20 minutes. Why do we need to be greedy? Why do we need to overinflate returns when that is absolutely plenty and absolutely enough to make a living from full time? Now, even if we target the next area, as we can see, that gives us just over 1 to 25 risk to reward. And even if we target the recent 4-hour low, that gives us a roughly 1 to 55. Now, don't get me wrong, the numbers sound great. What is that in reality? The 20% partial being held, so a small 0.2% of the trade being held. What does that equal to? So if we get to 1 to 50, for example, that's an extra 10%. So it's actually more than the majority of the volume I took off, just from that small partial. Very, very powerful lesson that we should really all take on board. And it really, I know, helps the Vipers to perform consistently. I know it's helped me perform consistently tremendously, because at the end of the day, I'm not trying to chase high risk to reward numbers. Instead, what am I trying to do? I'm trying to be realistic. Let's just make sure this is visible. Okay. Now, let's just let price play out a bit, because very interestingly, you can see that price actually did come back very close to our break even, and it just missed. So if you see here, I put my break even just past entry there, probably at 915 probably, or yeah, I think it was 915, 916, around that sort of level. And as you can see, price had come down to this point. And imagine again, like, having faith in your plan, having faith in your trade idea and your bias, because at one point we were at 1 to 39 risk to reward, so that small partial running at roughly 8%, so double the original large profit that I've taken off the table. So the original 4%, I've doubled that, and at this point you can see price impulsed all the way back close to entry. Majority of people probably would have closed their trade, but again, I've already paid myself. Okay, I've already paid myself for this trade, so I'm just letting it run. And look how close it came to taking out break even, but luckily it didn't, and price continued to the downside. Right, we're on the 15-minute here. We'll zoom out a bit. So why did it go there? Because it took all this liquidity to the left, as we can see. Right, so good reasoning as to why it would happen, and then price rolls to the downside. Right, achieving our overall target of the structural low here. Yeah, the structural low here, I'm giving a 1 to 35, and you'll see that again the screenshot of the partial that was taken. I believe I've marked out actually where it was taken here, just here at this red line. Yeah, so 1 to 138. So that small partial paying well over 20%. I think it was roughly about 26%, or just under, or just over actually. 26% from holding that small piece of the volume from that trade, from that scalp that I took, right? And I can't stress enough, like, look, the risk to reward sounds amazing. Like, I'm no doubt this video will have a clickbait title, but we don't shy away from being realistic. We don't shy away from being genuine, because that's all we care about being. And we, again, the purpose of these videos is to help give you content. If you notice, like, all we've ever said in terms of self-promotion is, you know, look at our website or messages on Instagram if you want to ask more or see, you know, learn how we trade. But we don't say like, okay, we're the secret sauce is here, or come and join us now to trade like this. We don't do that. We just say, look, here's the information. You can take the information we give on these videos alone, and that can give you enough to trade consistently. I've had people message me you know, many times over the years, saying how they've gotten funded. They are trading full time just off the free content that we put out on YouTube, and that's what it's all about. You know, all we're just trying to do is give you insights, give you value, and that's all we care about. So I hope you enjoyed. By all means, please drop a subscribe, smash the like button, drop a comment with your thoughts, and we'll catch you on the next video.